Welcome everyone to today's video on closed-end fund basics. My name is Allen Webb and I'm a member of the Portfolio Specialist team at RiverNorth. I'm joined today by RiverNorth Chief Investment Officer Patrick Galley. Patrick, you and your team have over a decade of experience in investing in closed-end funds, but many of our investors and viewers of this video perhaps don't know as much about closed-end funds as you. So could you start with some of the basics of closed-end funds? What is a closed-end fund? Maybe highlight some of the attributes.
Sure. A closed-end fund, it's a registered investment company similar to a mutual fund and an exchange-traded fund. But the major difference is a closed-end fund goes through an IPO process just like a regular stock. So what that means is a fixed number of shares are issued. When it's trading on the New York Stock Exchange, that market price that you and I can buy it at oftentimes deviates from the net asset value. Therefore, closed-end funds typically trade at a discount or a premium to their net asset value. And then net asset value being the liquidation value of the underlying assets.
So somewhat similar to a mutual fund, although instead of having continuous issues of shares, there's a fixed number of shares. Maybe talk a little bit about how then closed-end funds trade, because we can all go every day to a mutual fund and purchase the fund at net asset value. How does a closed-end fund differ from that?
Right. So after the IPO process, it's typically issued on the New York Stock Exchange, so investors literally can go to the New York Stock Exchange and buy or sell a closed-end fund just like a stock. That means supply and demand is taking over and market forces are determining the market price for a closed-end fund. That also means that the market price deviates from the net asset value or the liquidation value of those underlying assets. And we can oftentimes buy a closed-end fund at a discount to its net asset value, and sometimes they're trading at a premium to their net asset value. But probably most important is that closed-end funds are owned mostly by retail investors. By our research, out of $300 billion roughly in the space, approximately 95% of those shares are in the hands of retail investors. So as you can imagine, fear and greed takes over, and oftentimes those discounts get exaggerated and even the premiums get exaggerated in times of greed.
So Patrick, unlike a mutual fund, with a closed-end fund, we have a price and a net asset value every day. How do investors think about this net asset value, and how can they look at that?
Yeah, unfortunately, a lot of investors don't even look at the net asset value and the discount or premium that a closed-end fund might be trading at. But you're correct. The net asset value is priced every single day, just similar to a mutual fund. It gets priced at the end of the day. If you're comparing the market price to the net asset value, that'll give you what the discount or premium it's trading at.
So what else about closed-end funds are interesting to investors? Obviously, you've spoken about this, what a closed-end fund is and the IPO process, but what is it about a closed-end fund that's interesting to people that buy them?
So usually it's yield. So closed-end funds oftentimes have very attractive yields relative to other similar products in the marketplace. But that yield does not come as a free lunch. Typically, closed-end funds implement leverage, meaning that they're borrowing more money to lever the assets and enhance the yield. So that leverage becomes a double-edged sword. There oftentimes is more risk, but obviously the trade-off is getting more yield. But yield definitely sells in the closed-end fund world.
Could you talk a little bit more about leverage? What type of leverage is typically used, and how should investors think about that leverage when they go to look at a closed-end fund?
Yeah, the two major borrowings for closed-end funds or leverage is typically issued through debt or preferred securities. And the SEC has different requirements, leverage requirements for both. So a fund that issues debt, they can borrow 50 cents for every dollar of capital that they have. A fund that issues preferreds can borrow $1 for every dollar of capital that they have. So they have more flexibility by issuing preferreds, but oftentimes there's a higher cost of capital by issuing preferreds.
And these assets owned by closed-end funds, what types of assets are these?
It runs the gamut. At a high level, it's pretty much every type of equity asset class and every fixed income asset class, but you can get definitely in the sub-asset classes and literally get exposure to any type of asset class or strategy that's out there in an open-end fund or an ETF structure. It's probably offered in a closed-end fund structure as well.
So Patrick, in closing, is it fair to summarize a closed-end fund as a little bit of a hybrid between maybe a stock and an open-end fund, which obviously most of our viewers are familiar with?
Yeah, it's probably a hybrid between an ETF, an open-end fund, and then a stock, as you pointed out. So, I like to say what a closed-end fund is not. It's not a closed mutual fund. That's oftentimes a misconception when people are just getting familiar with closed-end funds. So it is a stock that issues a fixed number of shares. It has an actively managed investment strategy, and it runs the gamut from equities to fixed income and all the sub-asset classes from there. So you can get literally exposure to any type of asset class by investing in a closed-end fund. But what you do get that you don't get in an open-end fund is typically to be able to buy assets at a discount to their net asset value.
Thanks for your comments today, Patrick.
Thanks, Alan.
And with that, we conclude today's video on closed-end fund basics. For additional information on closed-end funds as well as any of the RiverNorth strategies, please visit our website at www.rivernorth.com.